approach with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. Now, today we have an exhilarating lineup of segments to give you all as much information as quickly as possible as per usual. Today we're going to do some live trading, some market analysis like we like to do here on the program, but again, I'd like to bring it back around to a new segment for you guys that I really wanted to do last week, but we got a little caught up with how hectic the market was on Friday, so we're going to try to do a one chart, 1 minute, or 1 minute, one chart segment where you guys in the chat can submit any chart you want, any ticker, and I'm going to give you a full analysis in under 60 seconds of that chart on a short, medium, and long-term time frame. So if that sounds like some sort of interest to you, feel free to drop some tickers in the chat right now. Primarily, I'm looking at the YouTube chat, but you can drop them anywhere. I'll take a peek. And we will do that segment around 9:45. So make sure you stay tuned for that if you want some quick fire analysis and see where we can find some potential opportunities in the market as it stands right now. Now, looking around at things right now, we had a tiny bit of a gap up on the market, but it kind of gave it back. We're basically sitting flat. As you can see, we just back tested my LOI here at 631.54 in the pre-market and looking like we're going to probably test that right into open. So keep a tight eye on that area as we head into an open. Negum in the chat already dropping some tickers. Love to see it. And if you guys want to drop those tickers, feel free to drop them at any time and we'll fire through those for the segment later on today. Gonna pull up our Catalyst Watch to get an idea on what's going on in the market today and what to potentially expect. Let's see what we got going on. We had the U.S. trade balance at 8:30, so that's why you saw a little bit of a dip in the market. We do a PMI today, 9:45 and 10 o'clock. And really outside of that, pretty tame day. You do have Trump scheduled to sign some executive orders today at 4 o'clock, so that's after market closes. So obviously, maybe keep that in the back of your head if you're swinging something, in case he makes any sort of commentary. But at least for day trading purposes, or at least for today's intraday price action, not necessarily a concern at this point in time. You do have Pfizer's earning call that's going to go on at 10 o'clock while markets are open, so be mindful of that if you have some healthcare exposure. Commentary said there could affect that whole industry in general. Depends. Pfizer's one of the bigger names. You want to keep an eye on that. And we do have AMD after hours today. So if you are a semiconductor holder, a growth investor, a tech investor, you're going to want to watch their earning call today after hours to get an idea on how that could affect markets going forward, especially with semiconductors and tech and growth in general, because any of these commentaries of these bigger companies, what they say during their conference call could give us an indication on where those specific sectors of the market are moving, essentially. So these are very important conference calls you should be listening to. If you can't listen to them while the market's open or when they go on, make sure you get some sort of transcript. We have AI now to make it really easy for you, so you can even ask AI, hey, dumb down this conference call in 2 seconds like I'm a third grader, and it will. And it will give you 3 sentences and tell you what you need to know. So you can do that too. It makes it nice and easy for you. Looking forward to tomorrow. Looking like we're going to have a pretty quiet morning if you have interest in Disney and Uber and McDonald's. They're all reporting before the bell. You do have mortgage applications at 7 a.m. tomorrow, so keep an eye on that. Obviously, if you have some interest in real estate or if you have interest in materials, those are kind of the areas that you'd see could be affected by those mortgage applications and the 30-year mortgage rate updating there. Obviously, the earnings calls with those aforementioned companies are before the bell. And you do have Cook speaking tomorrow at 2 and the 10-year note at 10. Outside of that, pretty quiet day tomorrow as well. So not too bad. We'll look forward at the week ahead during tomorrow's show, because I will be doing a show tomorrow as well at 9:15. So you can come hang out and see what's going on there at that time. And we'll get a better idea of things to come then. Hey, Toby, welcome back, brother. Toby drops Funko in the chat. Nice. So we got UNH, Oscar, Rivian, and Funko. So we got a few companies now. Ideally, we'll get 10. Make it a nice 10-minute segment. So feel free to drop tickers as you go, guys. If we get over 10, then I'll pick and choose. But let's shoot for 10. 60 seconds a chart, 10 minutes, go from there. And again, the idea is to fire through these very quickly and get as many as we can out there with a short, medium, and longer term time frame within 60 seconds. So it's going to be pretty rapid fire. It may not be super accurate, but we're going to go pretty rapid fire. And then if there's something that looks really good, maybe we'll run it back and I'll go back after the segment and we'll take a peek a little bit further. All right, market opened up pretty flat around this LOI here. So like I said, you're going to want to watch this into the open. It's not necessarily a make or break, but this was the level I was risking yesterday with a short side trade, saying that I would more than likely close my puts, or I did open a put position yesterday. I leveraged into it. Yesterday was an interesting day. In general, with the price action, we saw obviously a very big move here on the market, comparatively speaking. To the previous 2 days, it was expected, more or less. And when I say expected, I mean when you have 2 large bear candles, getting some level of a reversion isn't a crazy thought process. But seeing this kind of move was pretty nice. I did make some money on puts yesterday, doing some 0 DTE puts. Those numbers, hold on, let me fact check myself and check my journal here. And if you don't journal, you should be journaling. I made a 45 and a 91% gain on some 0 DTE puts on SPY. And then with that money, I was able to capture a 631 put on the SPY that actually expires today. So I opened it yesterday. I scaled into that position. So I am currently underwater on that position right now. But I reduced my size overnight because I made a whole point on why swinging a bear position can be very risky. And you want to be careful with that in this environment. But I was able to deleverage a bit, take some of my gains from those 0 DTEs to pad a potential loss there. And now I have a risk-free, essentially, put for 631, which will now be a 0 DTE put for the day. So we'll see how that works out. If we open sub this LOI, there's a good chance we're going to back test this like high 631 area. If that fails, we will get back to 629.47, which yesterday you could see was a pretty significant area of support and resistance. We tapped it many times in this, what is this, 5-minute chart? So 10 to a 2-hour window. It was strong resistance, then turned into support basically for the rest of the day, even on this little wick here. Bounced and kept going. So this is the key area to watch today. There's, well, 2 key areas really. Your 631.54s, we're opening on it, and 629.47. If 629.47 breaks today, bears are going to push this back down. So keep an eye on that level as we head into the market today. 5 minutes until market opens, so we'll take a quick look around at things. Obviously, the Qs and IWM are moving in synchronicity. There's a good word. With the overall market right now. Now, I did like that we got over 217 on IWM. As you guys know, and as I've said on the program, staying above that 217 area is really important for IWM. IWM, like the SPY, did feel the gap from that Thursday-Friday bear move. Now, as I mentioned on yesterday's program, I am anticipating IWM to basically fart around here in the GP. So basically consolidate around this 217 to this 219.34 area. Now, this analysis can change with earnings. We could see a lot of bullish earnings that could obviously affect all the indexes, obviously, but we do have a lot of smaller caps reporting this week and next week. So this could actually affect IWM, especially the weight in which they would hold in the Russell. That could change things a little bit. But in a perfect world, what I would like to see is basically some flux here where we don't really go anywhere. Meanwhile, we eventually have some level of a downside move here on SPY. And if you don't know what I'm talking about, check out the video I just uploaded to my channel yesterday. It's an excerpt from yesterday's show. It's about 9 minutes and 41 seconds. That video, if you don't watch it, you should. If you were here for the program yesterday, go back and watch it again, because there is going to be I use the word generational. It's not necessarily a generational buying opportunity, but it is a once in an every few year buying opportunity on the stock market right now. If you don't know what I'm talking about, after the stream, make sure you go watch that video again. It's only like 10 minutes long. That video could make you a lot of money if we get that opportunity that I present to you in that video. It is, again, an opportunity that only comes once every between 2 to 5 years on the SPY, on SPX, and the general market. You're going to want to watch that video. And while you watch that video, do me a favor, drop a like, subscribe, comment, all that good stuff. Thanks. But yeah, in that flux, in that time, the more bullish scenario would be IWM consolidating in this space. Now, there is a scenario in which, especially if the SPY does get heavy, that IWM does come down, and this 215.18 area is going to be a very key sticking point. You got the 50 MA around there, you got the 200 MA around there. If that fails, we're more than likely going to get down into the high 210s and stay sub 215 on IWM. So about a 10-point drop here. So this one's very tricky as it stands right now. I wouldn't be too overly bullish or bearish yet on the Russell. We had a decent rejection of this area that was looking for that breakout. It was this 225.72 to really push it. And again, that tattoo level, remember what I said, 223.32. Put it on your arm, tattoo it on your chest. That's the level to watch on IWM. Beneath that is bearish. Above that is bullish, at least in the medium term, right? So we are beneath that level, so you have to be very cautious if you are looking to be a bull on the Russell, on mid-cap, small-cap companies, because we could see a little bit more contrition on those names. Guys, we got about 2 minutes until the market opens. I asked you twice a stream. I'm going to ask you once now, and I'll ask you once again later. Do me a quick favor, wherever you're watching in the world, whether on YouTube, Kick, Twitch, Instagram, or X, do me a quick favor and interact with the stream. Drop a like, comment, subscribe, follow me, etc. Do anything you can. It would help me very greatly. I appreciate the 50 eyes and ears I've got watching and listening right now. And if you guys should take 1 second, take the phone out of your pocket if you're at work, hit like, whatever. And if you haven't already, hop over to my YouTube channel, hit subscribe. Once you have 500 subscribers, we'll have the show on every single day. So if you like the content here, do me a quick favor, pull over onto my YouTube channel at Atomcash and drop a quick subscribe. I appreciate all your support, guys, and I appreciate you guys taking the time out of your morning to spend it with me. I know you have many different options of content you could watch, and hopefully I help you either make some money, protect yourself, or you learn something today, because those are the goals that we have with this show. So thank you for your support in general. What was that level on IWM again, Negam asks? You are here almost every time I have a stream, and you don't know that level? Come on. I think I say it every single time I talk about IWM. The tattoo level, that's how important it is. 223.32. 223.32. If you have one line on your chart, that's the line to have. 223.32. That is the level, and I even typed it in the chat, in the YouTube chat for you, so you can't mess it up. All right, market is now open. We're getting a little bit of rally off of that 631.54, literally to the penny on the open here. Popped up on the open. Now we're going to get a little volatility here. Be very, very careful on this open. We're on the level. We're on this SPY level. Above it, we could have a decent day, but beneath it, bears could push this again, to reiterate, down to the 629.47. So be very, very cautious on this open. It's not bullish or bearish. It's very, it's very careful. Very careful here. And you're seeing the bears trying to hold SPY's head under the water here, underneath that 631.54 area. We'll take a look at the Mag 7 names and our sectors here momentarily. I just want to see if the market taps this dark blue line here on my chart. It's the 200 MA. If we wick that and get a quick bounce back up, that would be a really good sign for the bulls, get a little bit of a liquidity sweep. However, if we push that and we break beneath that, it's not going to look as good. So wait and see moment here right now on the market. Comparatively, Qs are pushing lower underneath that 566.06 LOI as it rejected continuously in the pre-market after breaking it, really. Then after we had that 820, 830 news come through, the trade balance news became resistance and now pushing lower. IWM also pushing lower. So all three indexes right now moving lower for the time being, but no real trend has formed yet because we haven't really had a defined push, I should say, in either which direction. Important to be of note, we are now at least of right now, sub the 1775 area on VIX. Remember, north of that area, the market is more risk off, it's more volatile, it's more cautious through the month of August OPEX. Now, south of that area, and I should really put a line on my chart here so you guys can see, south of 1775, north of 1770, south of 1775, the market is more by the dip, right? The market's more aggressive. If the market dips, it more than likely will get some level rally. As that 1775 level breaks, the market becomes aggressively more bearish. And if you don't believe me, go look back on the previous day's price action. The fact that we're opening beneath it is not a bad thing, but we're very close. We're in spitting range, as I like to say. We're very close. So I would still be extremely cautious on this open because if volatility wanted to expand, it definitely could. VVIX is down a little bit, which is a good sign traditionally as a bull, but keep in mind how VVIX is calculated. It's a volatility of volatility, so even if it being a little green or even north of 95 does give us an idea that volatility could snap back, because yesterday we did see, obviously, a deeper contrition, a deeper pullback on the VIX due to SPY's obviously bullish price action. So getting some sort of a rubber band, right, a flip here on volatility on the day is very possible. And if we crack that 1775, we could see basically a light pop up on the market followed by an aggressive move down on the day. And coupled with that, what I'm saying here on volatility, the fact that we're sitting around this level here and we're not strongly breaking through it and pushing here on the market is another sign to be extremely cautious on this open. You have 3 wicks here testing this level and the bulls are not stepping in at all. In fact, volume is actually pretty low for the open. About 200K on the last 1 minute candles here. And the open was only 600K, so volume's actually very low on the open, which is a little unusual. So this is not an open I want to touch at all, period. I don't care if this isn't a good setup for me to touch. It's very, 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 very iffy, where there could be an argument either way. However, the way the market's behaving is it looks like the bulls are getting ready with their fork and their knife, and they're looking like they want to take out a chunk out of yesterday's gains. Let's take a look at our Mag 7 here, get an idea of what those look like, and then we'll take a look at our sectors to see what the sectors look like, see if we can get a little bit more of a clear indication on if we could get a trend today. NVIDIA getting a decent red candle here. This 5-minute chart here. On the open, breaking that 200 MA off the open here, now looking like we could push to the downside in NVIDIA. It's a little overextended, including your pre-market action, but that doesn't mean it can't keep going. Let's look at our daily here. Obviously got a nice rally yesterday with the overall market. It was a lot of strength in the market, was driven through NVIDIA, I should say. But it really wouldn't shock me to get it down near 175 again. It's starting to crest is the word I'm looking for. And when I say things are cresting, it's looking like it's running out of steam near term. And I said that was a realistic possibility the other day when we have earnings coming up on the 27th. Some people getting out of NVIDIA pre-earnings would make some level of sense here, especially with the run it's been on. and continued to be on since its last earnings. It's a pretty solid move up. So getting some people to de-risk, get out of NVIDIA wouldn't be insane. Then again, it is also the biggest company in the world. So is that a little too unrealistic? I guess we'll see. But as it sits right now, I'd watch NVIDIA. It looks like it wants to go back to basically like 175, 176. And I'm not saying I'm bearish on it yet on the day, but in general, looking at the daily chart, it would make sense for it to come back down to that level, or 174. So basically between 174 and 176 would have to get retested here on NVIDIA near term before a decision really is made pre-ER, at least in my opinion. Let's check out Meta. Now remember, Meta was one of the only names that actually held up on its earnings so far. Decent pop on earnings, gap up, came down with the overall market the next day. Yesterday, decent green candle, obviously, and now we're sitting near, and I mentioned that level, basically 777. That general area on Meta is what you want to keep an eye on here, and we're just shy beneath it. So it's nice to see Meta's trying to hold on here. However, we're not seeing a lot of momentum through the earnings. Obviously, you had a strong gap up, great momentum. The fact that we came down a little bit, popped back up, it's looking good. It needs to break this localized high here within like next few days, like by the end of the week. This localized high has to get taken out, otherwise you're going to fill to the downside here more than likely, especially how the market's sitting, especially how the daily chart's sitting, and especially how the weekly chart is sitting. It needs to get more of a continuation, more of an upthrust, so to speak, more volume for it to continue going. If it stays south of that 777 area, I would lean more bearish on Meta here near term. Let's look at Microsoft. Similar case here, but less bullish than Meta. Obviously had a hard sell-off off their earnings, continued sell-off the next day. Overall market was weak as well. Got a little bit of a rebound yesterday, now kind of farting around. We're seeing a similar candle here basically on all of our mag names so far. Not really a lot to say here either which way. Very tight price action looking at the daily chart here. Google, a little bit different here. Looking like if it can break this 197, could get a nice little pop here on Google. Google remains to be the most bullish name out of the Mag 7 in my opinion. As I said yesterday on the program, watch Google as your barometer for strength on the Mag 7. That's how I would view Google. If Google can break out and continue pushing, things in general for your tech sector will look pretty good, mainly because it's the most bullish one. Now, if Google starts to look more bearish or gets an inkling of bearishness, especially if there's no news, right? It just happens, or I should say, price action just leans more bearish on Google without there being some sort of news event or something to cause it to be more bearish, then that would be a big warning sign on your Mag 7 names that the run could be a little tired. Now, I will say, even though the setup looks pretty solid, you got basically a flat top breakout here. Actually, it's not even really a flat top breakout cooking. You really have like a triple top here because you still consistently you made it a lower low, which isn't a great sign. So if this 197 doesn't break here, really today even, because we're basically retesting that range here, and if we zoom in a bit, it's probably a lower high, at least as of right now. Lower high, lower high, lower high. Yeah, unless we break over that today or tomorrow, we don't want to lock in another lower high here. Google might reverse to the downside here. However, if that does break, would look very good. So it's not that you're going to be early to the party if you try to short Google here. But if it continues to make another lower high and it can't crack this 197 with enough strength, it will show weakness, in my opinion, which will drive further weakness over the I should say the Mag 7 as a whole, right? Your tech sector as a whole. Let's pop over to Apple here. Apple sniffing glue in the corner again, looking like this low here. The POC wants to defend on the daily. You're getting a few more candles here, getting pretty tight down here. Watch this low. I said if we continue down this way, we mentioned how yesterday was a sandwich, right? If we continue holding this low, you're going to break. You're going to test 195.83. I'm very confident of that. Especially now that we have earnings out of the way, I'm very confident, especially if we break this low here, you're going to drop 5-6 points on Apple pretty quickly, at least in my opinion. Tesla is a do not touch. It continues to be a do not touch. It's getting very tight here. Lower high, lower high, lower high, lower high, higher low, higher low, higher low, questionable. This one's not necessarily higher low, but overall, getting very, very tight. You can even look at your EMAs and MAs here. My short-term EMAs, my long-term EMAs are all getting really squeezed. So you're going to have some sort of a stronger move here on Tesla, more than likely in the near future here. I still remain bearish on Tesla, sub 360, 330 area. As long as you're under that, again, I will continue to say the area to long Tesla is going to be down here between 212 and basically 220. That's going to be where I will tell you on this program, open a long on Tesla. Otherwise, I'm not really interested in Tesla, touching Tesla at all, not even for a day trade as it sits right now, unless you did some sort of a strangle. And I'll tell you one thing, if you did a strangle right now, it's probably going to be extremely expensive because you're probably not going to want to get a weekly strangle. Let's do like next week. Let's just see how much that costs. We'll do 310. Yeah, it's going to cost you $20. Oh, $20 in premium, so $2,000 to do a strangle, and you need a $20 move either way. So you need a push over 330, or you need it sink 290 if you wanted to do a 10 DTE strangle. So that's a very expensive strangle with a lot of risk. It's just not worth it. There's not really a play here, in my opinion, where the risk to reward makes sense, I should say. And we'll look at Amazon. Amazon, similar case to Apple, where it's getting tight down here, and Bezos continues to offload a boatload of shares. I would watch basically this 210.88 level I mentioned on the program, I think yesterday. If that level cracks, you do have the 200 MA that could catch it down here, but if that level cracks, you will get more of a pullback here. So the way that the Mag 7 are set up, and that's why I keep mentioning this, the Mag 7 are slowly tilting a little bit more bearish. So the environment can go bearish very quickly because of where they're sitting. It's not like it's overtly bullish or we're respecting trends here. We had a little bit of a come down where there's fear in the market, whatnot. Now we're kind of basing. If we're basing there and there is another pull, you're going to see, and at least in the environment, and as I went over all these names, there is an opportunity for a lot of these Mag 7 names to get rejected to the downside to a technical level that would make a lot of sense. That case holds on Amazon. That case holds on Tesla. That case holds on Apple. That case holds true on Google if it can't break 197. That case holds true on Microsoft if it puts on a candle like this today. And Meta, if Meta can't sustain north of 777 and break an all-time high. And Nvidia, which is looking a little better now. If it gets, again, it more than likely needs to come back to 175 to 174 before earnings anyway. So this is a very cautious environment as it sits right now. Let's pop back to the market, see if anything's changed. All right, bulls did rally above that 631 level here. A little bit of strength here, but this price action's super tight. Like, I know it looks dramatic because the candles are wide, but realistically, we have a $1 range on the market so far. So this is a tight range day so far. Guys, be careful. Volume is not good on the market. For open, I mean, it's not bad. Let me pull that back. It's not bad. It should be better right now. Volume is sitting around like 200K a candle. Let's look at the 5-minute volume. Okay, maybe I stand a little bit corrected. Volume is a little bit better than I anticipated. I like looking at the 5-minute. It gives me more of a clearer picture, but it is decreasing, which makes sense. We're over the open. So we'll see how this pans out, especially with volatility coming down a little bit. VIX sitting at 1745. Again, I don't feel comfortable being this close to 1775. If this cracks, I'm telling you, we're going to get a pullback, and it's going to be a pretty harsh pullback on the market. But until then, it looks like the market is cautiously trying to push to the upside. And I say cautiously because that's what it looks like, very cautiously. Let's check out our sectors and see how the sectors look on the day here so far. Utilities marginally green, up 0.22%. Energy mixed bag here, 0.3%. And consumer staples, 0.09. So when I say mixed bag, I'm talking about our defensive sectors. I like to reference them. Your XLU, your XLE, your XLP. These tend to move together when there's more of a bearish environment. That is confirmed with a bearish XLK and a bullish XLU, XLE, XLP. Currently a mixed bag. Even tech is not that bullish, or it's not that bullish, it's not that bearish. So these four together are very indicative of questionable price action today so far. You're not really seeing people being too bullish on our defensive sectors, and you're not really seeing too many people being bullish on our tech. It's very like people are walking on eggshells kind of environment. That's what it feels like looking at all the data we've looked at so far this morning. Real estate, pretty flat, 0.03% down. Materials having an okay day, all things considered, compared to the rest of our sectors here, up 0.5%. Industrials, marginally up day, 0.21%. Healthcare, watch this, because we have Pfizer's conference call at 10, currently down 0.41%. So that this XLV should move a bit with Pfizer's conference call if certain comments are made on the outlook on how Medicare, Medicaid, etc. are impacting these companies. Now, it's not a health insurance company, it's a drug manufacturer, obviously, but having that commentary there could affect XLV. You're going to want to watch this around 10 o'clock. Financials pretty flat, had a little bit of a bump there, moved back down. Consumer discretionary, so your Amazon and Tesla mainly, moving up a bit. Actually, most bullish on the day, all things considered, or second most bullish, so not too bad here, 0.5%. Comm services, marginally up day, 0.2%. Excuse me. Whew. Had to yawn. Let's go back to the market here. Ooh, nice little green candle pop there on the market. Looks like tech had a bit of a push here. Watch cues here. This is cautious. Just broke the 200 MA, or trying to break the 200 MA on the 1 minute. You do have this LOI right above it at 566. So this is an area if you want to take a short. It's a decent short on the cues. How ballsy do I feel today, guys? Do I want to take a bear position on tech? I'm contemplating it now. Let's see. How ballsy do I feel today? I'll wait a minute or two. If we start to crest, again, round off the top here, I think we're going to come back to 565-ish. But if we see the bull step in, we could get a nice little rally here. So I'll wait for now. We'll give it 2 or 3 minutes here. There could be an opportunity to short. See something on my other screen here. Let's get an idea. The market may be positioned to push to the upside a little bit more today. We're starting to get a little bit of a potential trend forming. I'm going to look at the 566 puts. Let me add that over here. Go back here. There we go. All right, I might take some 566s here on a 0 day. I'm letting you guys know because obviously there's a delay in the stream. Not in yet, but depending on like this candle and the next candle essentially is going to give me an indication on if I should roll the dice on a short here or not. Why is Nvidia red? Interesting. Who's pushing? Oh, it's Meta. There you go. Meta's over that 777 level we just spoke about. So it looks like some strength coming through Meta. Microsoft's weak. Google's pushing that 197. So this is a good sign for tech right now. All right, Meta. Meta might go. Meta might go. Good volume there. We have news. No news I can see. So it looks like this rally is perpetuated by Google and Meta mostly. Microsoft not participating at all. Nvidia not really. Getting a little bit of a bump here, but not much. Apple questionable. Tesla getting a little bit of this rally. Amazon getting a little bit up, 2% so far, so looking pretty okay. I'm definitely contemplating it because as you can see as I flip around to these other charts here, the other tech names aren't really bullish. Or they're not pushing bullish, I should say. Google could continue to move. I'm going to take it. All right. All right, I'm long the 631, I'm sorry, the 566 puts at 121. All right. So it's a 566 0 DTEs at 121. Watching for this 566.06 to break. Probably look for a little bit profit scale right around, actually getting there now. down near the 200, and then looking ultimately for 565 to backtest. Here we go. All right, going to trim some here. It's 13%. If you're in a smaller account, you want to de-risk a bit, you could definitely put a stop loss here. I think we're going to sweep through 565. Basically, well, you might pit stop right around here, 565.72. The 200 MA could also catch it here, to be fair. But if we break here, you're more than likely going to get a little bit of a pit stop rate at 565.72. If that breaks, you're going to hit 565. If that breaks, you're going to low a day. Trim again here. It's 21%. Watch the green SAR here as well. All right, I'm going to put a stop loss at break even now, just to protect my position here. It's a 0 day. We did just back test this LOI, the 566.06. So if we wick this, we're more than likely going to get a continuation to the downside here. But bulls can reverse this very quickly, and I don't ever, as I said yesterday on the program, I don't ever want to overstay my welcome as a bear. Bear moves are quick, they're fast, you take your money, you run. If you have the opportunity where you could put a stop loss on and let it run a little bit more, because you do see the greater picture, which I do see the opportunity to get back to this 565 area and even pull low a day, there's a good opportunity there. I don't want to be greedy and not ride my position with no stop, because I could just get, this could just push hard here if it breaks 566.06 and we could rally high a day. So I don't want to lie to myself. MACD's starting to flip over bearish here. You still have a bullish RSI that's starting to tilt, and watch us break this green SAR here on the 1 minute. Again, looking for 565.78 and then 565 even. Those are the two areas I'm looking at for basically take profit points. Or, sorry, 565.72. Let's check out our other names real quick. Meta rejection. Meta could bounce right here. Nvidia's a little weak. Microsoft weakness. Watch, if Google fails 197, you're going to get a pull. Apple could get a pull here as well. Tesla's bullish. And Amazon could do a lowercase n. You're going to see a lot of lowercase n's in this environment. Trust me. You will see a lot of that. Oh, might get wicked out. Let's see. Will I get stopped? We're right at that LOI. I'm a few pennies from my entry. Whoa, whoa! I need some music. Hold on. Let's put on some. Let's get some music in here, right? So here, we'll throw a little background music on for the stream, royalty free. Get some exciting some jams. Oh wait, if I'm gonna get stopped, I'm gonna put on some jams. We're right there. We're literally right at my entry. I did not get stopped. We are right at my entry. I'm gonna put the jams on. No, I'm not. Come on, make up your mind, Q's. What are we gonna do here? You stop me out or not? Not yet. Literally by a penny. Nope. The little background jams on. Little zero DTE pump music, or dump music here. Let's see. Oh, nope, got stopped out. All right, music's over. Oh, well, it was fun while it lasted. Oh, well. Hey, nice 21% gain, though. Can't be mad about it. Can't be mad at all. Not too shabby. Not too shabby at all. Hopefully you guys made some money on that, as I like to do whenever there's an opportunity on the show. If the opportunity presents itself, you know I like to share them with you. I'm guessing Meta got a... Yep, Meta's pushing. Now, if Meta taps that all-time high and doesn't seem to push through it, while the other Mag 7 are looking weak, that could be another opportunity to short the Qs. So I want to watch that, especially if that coincides with Google being sub 197. So here's your game plan. If Google sinks 197 and Meta taps the all-time high and rejects the all-time high, I will open a short on the Qs. So we have a multi-pronged plan here. We're going to watch Meta. We're going to watch Google. Google looks like it will be failing the 197, or at least back testing it. Because everything else, the way it's sitting right now, with the exception of Tesla, and Amazon's questionable, this is probably going to come back down. The way everything else is sitting is not necessarily bullish. It's questionable, leaning bearish. So, I actually want Meta to push the highs. I want Meta to tap that all-time high to sweep it. And I want Google sub 197. If those two scenarios line up, I open a short on the Qs. So if Google's sub 197 while Meta taps that all-time high, then I can open a short on the Qs. Those puts are now at 136. My highest trim was 147. So I may not get my ideal setup here, but I get wicked out. It might have been. It's okay. Google failed 197. Let's see if it continues under that. Yeah, Google staying under 197 is not going to be a great move here. SPY rejecting. I might get back in on like a 1 DTE. I might get my wish here. That all-time high on Meta. 78475. I might get my wish here. Let's see. Overall market is seeing weakness, although Meta continues to push. If we sweep this high on Meta and Google is under 197, I open puts. Come on. That's going to be an ideal scenario where the market is still propped up a little bit by one stronger company, in this case Meta. And as Meta will retrace, which it more than likely will sweep the liquidity at the all-time high and then retrace, you're going to get people who pile in on bears at the top too. You're going to see it pull back. Look at VIX. VIX is popping up now too. This is looking like my opportunity. Google's right at the 197. We'll get to that segment in a little bit here, guys. My one chart, 1 minute segment. But right now I'm very, very, very locked in on this trade potential. I am locked in. Like, I'm excited. Because this is where the stars align for me. A lot of things line up really good. I might take an early stab here. Might take an early stab. Volatility's still on the rise. Let's see. Come on, Meta. Give me another dollar here. Alright, I'm gonna get back in. No guts, no glory. I'm scaling back into the 0-day 566s. I'm gonna take my time here. I'm just adding slowly. Okay. Adding. All right, I'm like a little bit more than half size on them. I might add a little bit more. All right, I'm gonna add a few more here. Okay. All right, full size now, 128. Let's see. Oh! Oh, baby, the timing. I'm trimming those out right now. LOL. Oh, trim again. LOL. LOL. The timing, baby. Oh, man. Put that in the highlight reel. Let's go. Ooh, it feels good. Oh, baby. Woo. I told you. I say there are two things. One, a very specific scenario in which I take a shorts. Two, this was looking like a golden short setup. Everything, the stars were aligning. I'm telling you. When you see all these things line up, I hesitated, but I still pulled the fucking trigger, and I'm so happy I did. I just actually verbally censored myself. Yes. Oh, man, the timing. Let's go. Hold on. We need to hit a... Let's go, baby. Woo! Love the timing of that. Oh, man. God, I love when trades work. Like, the best trades work the fastest. It's almost like, it's like comedy. The fact that that happened like that is hilarious to me. Like, actually hilarious. Was there news? I know it's 10 o'clock. Oh, we probably had, what was it? We had PMI. That's why. PMI dropped it, but still, that's funny. That was really funny. Holy crap. Oh, that's probably my best trade I've done on stream so far. That was great. The fact that I spoke about it for like 20 minutes. The fact that I was talking about it over and over and over and over. Oh, man. Tom says, dude, Neegum says, holy hell, I joined you. Good Lord. Yeah, man, that was a fast one. Those are the best kinds of trades. So, yeah, I got a 128 average. I got a good chunk out in the 180s. You might get a bounce back here. I'm going to put a stop loss on it, break even, and we'll just see where it goes at this point. I made good money on that. We'll see where it goes. Oh, wow, that was funny. Excuse me, I'm going to go get some water. That was just... Oh, man, that was great. Let me grab a water. Be right back. And I'll, here, we'll put on some music for you while I'm gone. Oh, that was something, guys. That was something, wasn't it? Whew, and you know what? You want to know the best part? It may not be over yet. What did I tell you guys at the beginning of the stream about 1775? If you have the ability to have a runner on this play, you're in the money. If 1775 breaks, you're going to be sitting on a fat gain. A fat gain. I said if we broke basically 565.72 and 565, which we haven't broken 565 yet, to be fair, we did wick it, went above it. If we break 565, lows are going to break. If lows break with a VIX north of 1775, you're going to be sitting on a fat bag of cash on this trade. Fat bag of cash. We're testing that 565 area right now. Wow. That was fun. That was a fun one. Oh, man. And this is why you should be in our Discord. Link in the description. Because You don't have to watch me on a 30-second delay or however long the delay is here on YouTube. You get that alert as quickly as I can type it. That was fun. So we're gonna ride these out right now, see where they go. Like I said, south of 565. VIX is testing 1775. Okay, two things. One, the market will push more bearish, or more than likely, on a VIX break of 775. Also to keep in the back of your head, now the VIX is breaking. If VIX stays north of this area, that doesn't necessarily mean the market is bearish. More than likely will, in this case, judging by yesterday's price action. But you should be risk off in general. If you're going to trade with less capital, because the market will be more volatile either direction north of the 1775. You're going to see more emotional trading. People are going to hop in and out, be scared, etc. If we stay north of this 1775 that we are now breaking on the VIX right now, as we see SPY breaking low a day, falling. Qs are trying to hold it up. The Qs are being the atlas to the entire stock market, holding the world on its shoulder, and it's trying to keep that 565 steady. It is not looking too good, but it's trying real hard. Let's look at our Mag 7 real quick. Nvidia is holding its ground. That is to be seen, though, but it is holding its ground for now. Meta, we did not sweep the highs. We got very, very close, and I'm very happy I pulled that trigger early because it was looking like we were going to get a little toppy there before it happened, and it did. Microsoft has not had basically bullishness today at all. It has been trending lower. Google has failed the 197. Watch VWAP here. I don't love to use VWAP, but breaking south of VWAP here, you could get a nice little knife here on Google, but they're going to try to defend. Apple somehow, through the chaos, is bullish and is trying to be bullish right now. So Apple is trying to be some level defensive. Tesla and Amazon a bit sideways. So not out of the woods here either which way on the market. SPY's catching more a bearishness than the Qs. The Qs are actually looking more bullish, all things considered, with IWM holding a little bit more weakness than tech. Let me check on my, I opened up some bear spreads on the SPY yesterday. How are those sitting right now? Let's take a peek. Let me take a peek. They're all out of whack. It's funny when you get a big move on the market, especially if you're in spreads, you'll see how like quickly things go like out of whack. The bid and the ask jump crazy. It's pretty entertaining. Okay, those puts are sitting at 161 right now. High on those puts was 211. Remember, my entry, or my average, I should say, is around 128. I started loading in on those. The VIX is going to fart around this level here. It won't be a clean break, but if it is a break and we get continued push here on the VIX, that could be bad. For confirmation, you're going to, I was going to say 16. You're going to want to watch 16 on UVXY. 16 is going to be a hard number to break. Now, I will say, if we see 16 break on UVXY, we see 1775 break on the VIX, what we could see is a sweep to the downside after yesterday's price action. However, by the end of the day, the market more than likely is going to try to pull back on volatility again, meaning we could see basically an intraday move where the market looks like this. We get a U, right? So we get a move down on the market. You're going to want to watch volatility, because if volatility crests at some point, so I'm predicting, I'm thinking we see volatility rally now, but we're going to see the market move down as volatility rallies. At the same time, it's going to hit a point where we hit a support, and the market should rebound, I think, by the end of the day. But that depends on how everything looks. We got to play it by ear. We got to look at everything throughout the day to justify if that will happen. I would be very cautious. Nvidia might get that 174, 175 pull today. It is very likely with how these candles are forming right now, especially on the 5-minute. This could be your what's the word I want to look for? The catalyst to continued downside here. Meta is trying to continue to be the atlas for the tech group, or tech group of stocks here. Microsoft basically continued trend. Google backtested the 197, currently rejecting, but trying to catch its wings here, trying to see if it could push above. If you don't see Google break 197 in the next 10 minutes, you're going to get a pull down on Google as well. Apple somehow, again, through the madness, is the market's finding bullishness in Apple, at least as it stands right now. Nvidia getting a little bit of a rally here as well. Very mixed bag, though. To be very fair, it's mixed. It's a very mixed bag. Qs are defending that 565 area. We sank below it momentarily, but you're seeing the tech bulls are trying to defend that 565 area. And again, 565.72 is the next area you want to watch. So we're not out of the woods either which way here. Let me check on our sectors real quick, because it's a very mixed bag the way things are sitting right now. Yeah, look at this. So your defensive sectors are all actually red. So that's interesting to see. Your XLU, your XLE, and your XLP are all actually red. Meanwhile, tech is still green. Again, trending down. But essentially, all of our defensive are trending down, while tech is also trending down. That's not a good sign if you're looking for a directional day, right? You're looking for the market to trend up, trend down. Seeing, and this is just a very simple thing you can do. This is just one of the things you could look at to get an idea of what the market's looking to do. Seeing your defensive sectors move lower and your tech sector also move lower is very indicative of just a bear day, or in general, more confusion, meaning more choppy price action, rapid liquidation where people are just getting out of the market. That can be a possibility as well, because typically on a healthy market, when the VIX isn't too high, you see tech go up, defensive go down, tech go up. Yeah, and they inverse each other most of the time. But right now, everything, hold on before I say it out loud, mostly every sector is in a bear trend. XLRE might be the exception to that rule, but mostly every sector is trending bearish right now. And again, that doesn't necessarily mean I want to be a bear, although I do have a bear position on because it made sense at the time. Now it may not make as much sense. But what I'm predicting again on the day here is we see a volatility expansion and then hopefully a decay by the end of the day as well. So we see the market come down with a volatility pop, but then at the end of the day or midterm of the day, we start to round out, volatility starts to come back down as the market reverses. That would be ideal. But at least how I'm positioned right now, yeah, the market can die on a vine. It can go to hell. That's what I want. I'm going to take another trim here on my put play. That's going to be 74% gain. Took some out around the 210 area. Got some filled around 210, 209, 208. Probably go runners on my next batch. So I'm basically looking for the low a day to break. If we see low a day break with volume plus that North VIX at 1775 North VIX, you're going to have a drop, a hard drop. Actually, let's zoom out here a bit. Okay, so this is, I mean, this is going to be perfect. The 200 MA is right here. This blue line. We break that. That also breaks low a day. It's going to sound crazy, guys, but that puts 560.80 on the cards. That puts this contract, if we tap 560.80, at over $5 intrinsic value. Meaning with a 121 average, let's see, if it hit $5, I'd have 313% gain. Those are pie in the sky numbers. Don't chase anything, right? That could happen. That is on the deck. It doesn't mean it will, but it could happen. So basically, it's gonna keep it real simple with you guys. Low a day breaks, there will be a deeper pullback on tech. If low a day breaks, I would look for the weakness to come through on Meta, because Meta is actually showing some level of strength. I would look for that weakness to come through on Google. Like I said, within a 10-minute window, if it can't break 197, it's gonna come down. I would look through that weakness to come through on Apple, because Apple is trying to hold things up, funnily enough. So if Apple starts to get weak, that's going to be bad. And Amazon. Amazon had a nice little pump here in the open. It's kind of just consolidating. Could go again, don't get me wrong. But if the market tilts bearish, this is where you're going to see liquidity get sucked from. You're going to see it get sucked from Amazon. You're going to see it get sucked, or I should say swept. Swept from Apple, sweeped from Amazon, not really Tesla, sweeped from Google back to open essentially, not Microsoft, and sweep from Meta for like 5 points, nothing crazy. That in combination with an NVIDIA low a day break could be big. So on this program, I'd like to say when I'm risk on and risk off, right? And I very rarely say when I'm bullish or bearish. This is an environment where it stands right now where I would definitely lean more bearish on the day, but also risk off. Understand the difference. It doesn't mean be a risk on bear where I'm putting a lot of money on the table to be bearish. I want to be a risk off bear, so maybe not as much money on the table, but the market still leans bearish. Why? Because you can have a bear day with lower volatility and the market can still move bearish where you can more confidently put a bear trade on. When VIX is expanding, and I know everyone and their dog says, "Ooh, when the VIX goes up, the market goes down." Well, that's not true. If the volatility continues to expand, yes, you'll have wider price action, but it may be a case in which volatility makes your trade a little bit more risky, right? It makes it harder for you to make money as volatility goes up, theoretically, because there's a bigger price disagreement. Remember how we calculate the VIX. So I want to be a bear in this environment, technically, but I also technically want to be risk off. I don't want to be too heavy as a bear. There'll be times where I want to be risk on as a bear, risk on as a bull, risk off as a bull, right? So I could still play the market, but you got to be able to flip multiple switches. You got to know when to turn the risk on, when to turn the risk off, lower size, increase size, step on the gas, step on the brake. That's what I'm talking about here. This isn't an environment to step on the gas and be a bear, but it is an environment to put it on cruise control as a bear, which I can do because I had a very precise entry on my put position, and I can kind of just ride it basically kind of risk-free here, or I should say stress-free at this point. Does that make sense, guys? Questions in the chat? Does that make sense? Let me know. I think that makes sense, but I just want to make sure I'm making sense here. We had UNH, Oscar, Rivian, and Funko suggested for our 1 minute, one chart segment. Now we've got almost double the viewers since I mentioned it, so I do want to do a segment called 1 minute, one chart. But every time I try to do this segment, the market does something fun, and I want to keep talking about the market, which I think is more applicable and what you guys would care more about. But if we do get to that segment, do me a favor in the chat, guys. Drop a ticker you want me to look at. We're breaking low a day. We are breaking low a day on the cues. This is not a drill. I'm going to shut up and stop plugging other things because we are dropping right now. So that's a confirmed low a day break. You're going to want to see a 5 minute pull under this. So basically you want to stay sub, what number was this? As a bear, I want to stay sub 164.32 for approximately the period of 5 minutes. Now, if I'm a betting man here, we get a little bit more of a pop-up and then go. However, I wouldn't be mad if we just kept dropping. It would be better to get a little bit more of a cool-off here, come up a tiny bit more, then drop. But anything can happen, especially with an 18 VIX. Watch 1808. That's my next LOI on the VIX. Somehow, IWM is remaining green. I don't know about that. SPY's dropping. Watch 629.47, your next LOI on the SPY. I'm going to go to runners on my cues here momentarily. And let's get at least 100%. That sound good, guys? So I'll look for an exit over 242. That'll get me a clean, as the kids say, that's a bag, right? That'll be 100% gain, which we already tipped it. But that'll be the area I'll look to go runners. Ooh, NVIDIA broke the low a day. That's why I said that'd be one of your factors to watch. Watch Meta break the 200 here. That's going to go down. Microsoft is not finding any bulls at all. At all. Google, it hasn't given up. I said 10 minutes. We got 20 more seconds. We got 20 more seconds. Can Google stay north of 197? To be seen, but it may make it. It's trying. It is definitely trying. Yeah, Apple's going to have to pull back here soon. It will. And when that happens, the market's going to get yoinked. Yoink. Tesla's not looking great. Yeah, so sub 197 on Google. Amazon or Apple getting... It doesn't need much, honestly, to go bearish. And Amazon can give this all back easily. Easily. Another low a day tap here. Now, we haven't had 5 minutes under it. We've wicked around it. So we'll see here if the bulls can hold, or if the bears can hold the bull's head underwater here and drown it out. These wicks could be indicative of a reversal, but not yet. But it could be indicative of a reversal. That is to be seen. SPY is not looking great, guys. We are more than likely going to tap that 629.47 here on the SPY. Just a quick question in the chat. Do you guys prefer, when, especially like days like this, if I just focus on the market, we talk about what's happening real time in the market, or do you prefer no matter what's happening in the market, I make sure we get to our segments, our scheduled segments? You let me know in the chat. I'm very curious. So I know I've got some very loyal viewers that come almost every single time I'm live, and I'm curious what your opinions are. So please let me know. Would you guys prefer, no matter what, to always do the segments, or when the market takes over and something interesting is happening on the day, we focus on that? I have a feeling it's the latter, where you guys want me to focus on the market when we have a day like today. But I just want to make sure. Here we go. Going to take my runners on. Going to runners on the Qs. 107% gain now at runner size. Easy peasy. Nice and quick. Let the market determine. The latter. Okay. Tom says the latter. Negum says let the market determine. I had a feeling you guys were going to lean that way, but anyone else, please sound off in the comments. Just want everyone's opinion on that. If you'd rather me focus on when the market's doing something important, we'd look at that. And we cut out the segments because we can always do them another time. Or if you prefer to always do the segments no matter what. Brahmin says, nice GP rejection on SPX SPY and the Qs. Yeah, we are definitely going down. Like I said to you guys maybe 10 minutes ago, there's a good chance of getting to 560.80 today on the Qs. As long as VIX is breaking 1808, so now you're going to watch 1830. Level to level to level to level. Market doing something important should take precedence. Okay, we're all in agreement then. No one said anything otherwise. We're all in agreement. So going forward on the show, if the market's doing something important, or especially if I have a live trade on, we'll focus on that. And segments will get kicked off to another day or something, which is fine. Unless I have something very important to talk about, which today I don't. We're just going to... I like doing segments because it's fun. Those puts that were entered at 121 are now sitting at a comfy 270. Now, I still, just full transparency, so you guys know, I'm still underwater on my puts on the SPY right now. So I do have, and again, I said at open or before we opened, I opened up puts on the SPY yesterday. I swung them, but they're mostly risk-free essentially at this point, unless they go literally to, I think it's like 10 or 20 cents I calculated. So as long as these are north of 10, 20 cents, I make money. But I have a 270 average on these, so these are still underwater. A put position I'm swinging yesterday, but I covered a lot of it with 0 DTE, so I'm chilling on it. And I probably have a good chance of getting out of this one. Maybe. We'll see. Eddie says your market insight, nice seeing how you look at the market. Okay, cool. Then we will do that. No one's disagreeing, so the consensus is we will focus on the market when the market wants to be focused on. Now, as it pertains to these 0 days, I like to, I mean, especially in this environment, I would love runners here. And I probably won't take these off. I'll probably just keep a stop on and let them rock. But if there's a clear trend reversal, so in this case, what I would look for here on the market is a recovery of the old all-time lows. I'm looking at the Qs here. I'm sorry, not all-time lows. I misspoke. Recovery of the daily low. So the low on the open here, 164.32. that would be the point in time I'd want to potentially close out these puts. Now, keep in mind, these are 566 puts. So I'm in the money now, 225 intrinsic. So my extrinsic value on these puts roughly is about 40 cents or about 20% of the value. So I do want extrinsic and intrinsic value as possible. But however, if we are going to continue to the downside here continuously, or I should say if we do hit this level here, then I want to keep these on. But if there's a sign that we recover, or we could be recovering, then I'm going to want to get out of the way, or at least retain most of my gains. So just because I have a fat gain on a 0 DTE, I don't want to let it go to 0. As long as the trade is valid, I want to keep the trade open. If the trade goes against me, I want to be honest with myself, even if I'm making money or losing money, and say the trade's dead, right? And that's a very important thing I don't think a lot of traders talk about. When the trade's dead, it's dead. Be honest. Let's look at the market again. Nvidia riding the lows. Look at Meta. Ta-da! What'd I say? A 5-point pull on that break. There it is. 775. I almost said 175. 775. So this is like where Meta might try to find its feet. So Meta might try to get a bounce here. Microsoft is just sucking eggs. I still have my my spread position on because it's completely fried. It's at like max loss. So I've got 2 weeks on it. I've got till the 15th. It would be miraculous if I could get any blood out of that stone. So we'll see. I will let you know if it happens. All right, so this is going to be your next area to watch. If you're a bear with me right now, or you're bearish on the market, like I mentioned, Apple and Google. Google has broken over 197 in that window, but it's not finding continuation, right? It's not thrust, volume, etc., whatever you want to call it. The bulls are not pushing north of 197. You could take a bear position here on Google. Again, I will reiterate, though, I am very risk-off in this environment. Typically, using the word typically, I would take a short here on Google. So do with that information what you will. If you're watching at home, I would take a short at Google, and I would short it probably at the money to deleverage some risk. If you want to do that, you can. I'm personally not going to do that because I'm going to be very risk-off in this environment, and I'm just looking to survive, right? In general, whenever the market's a little rocky, I just want to survive. I want to make my money. I want to get out of the way. And that's the kind of mindset I'm personally in. However, if you want a potential opportunity, I like a short on Google here intraday south of 197. I believe you're more than likely going to back test this 0.786 retracement at 194.79 before close. Apple is somehow, again, still showing the strength. It's getting wicky here on the 5-minute, though. If it doesn't break this new high on the day, this 204.38, it will reject. It will reject. Here's Amazon. Literally right here. 214.36, that breaks, you lose about $2 on Amazon. Easy peasy. Easy peasy. Another new low on the Qs. Oh, my SPY puts. Come on, baby. I need 270. Let me check my spread out. How's my SPY spread cooking? Let's see. Got a baby profit on my SPY spread. I'm also in the money pretty considerably, though. I'm in the money like $4. I'm long the 632 puts, short the 631s on my spread. So I'm sitting pretty right here. Especially if we lose another dollar or two, I'll be sitting real pretty. Tapped 305 on those Q zeros. Let me just double check we don't have any additional news. Somehow the fear and greed index is in greed right now. I don't know who and how they calculate that in general. Maybe after yesterday's price action. But 1 week ago was even in greed, which is kind of interesting to see because even 1 week ago, if we look at our daily chart on the SPY, yeah, we were floating, but every day we were closing lower. So, well, I guess we gapped up and still closed lower. So interesting to see that the market is feeling greed still. Very interesting to see. Again, I'll reiterate, later in the day, we don't have much going on. You got Trump signing executive orders at 4, but it's going to be a quiet day for news. So unless something pops up that is unexpected, the market is, it sounds dumb, going to do market things. As long as we're north 1775, though, you want to be risk off this market. I'll continue to say it. You don't want to be too ballsy here. You're going to have a bad time. Market getting a little bit of a bounce here along with the Qs. IWM, whoops. Back testing the GP for the most part. Top of the GP. So we'll see if that can hold up. Your VVIX is also moving up. So remember, your VVIX is the volatility. So odds that volatility will reverse, essentially, have been moving up as the VIX moves up, which makes sense. If volatility expands, there's a higher probability that volatility will also reverse, theoretically. NVIDIA, trying to find a bid. Ooh, Meta pushed the lows. Look at that. 773.03 low a day on Meta. Ooh. Meta pushed the lows. What's this candle? 771.91. Meta. I don't know, Meta. You were looking pretty good earlier. I don't know, brother. Looking a little dicey there now. You know, Microsoft sucks eggs. I'm going to continue to say how much Microsoft sucks. I have a feeling a lot of people are disappointed or will continue to be disappointed if they held after that Microsoft earnings. They had great earnings. I'll continue to say that. They had great earnings. But disappointment stock right now. Well, if you like the short on Google at 197, you should probably be up. I'm sure if you're at the money, at least 10% now. Nice 47 cents or so underneath 197. You're tapping VWAP here. If VWAP breaks, you're going to have a fat gain. Congratulations. Apple is holding the market up and continues to hold the market up. It did break that high, and you saw a nice rally off of that. So we'll see if Apple can hold it together. It's getting a little extended, though, on the 5-minute. Getting a back test to this POC would make a lot of sense. I would watch and see if that area fails if you're a bear. Tesla, iffy. Amazon, yeah, Amazon, you're going to give that move all back. The 200 might catch you, but this whole move is going to be given back. Meta rejects the 1.618 extension on the daily. Womp womp. I'm not making fun of you, I'm just saying womp womp for Meta. Ooh, look at that reversal there on the Qs. Back down real quick. Perpetuated by Meta breaking the lows. And NVIDIA, again, questionable. Microsoft grinding lower. And Google breaking VWAP. I should have just taken those puts. But hopefully, if you guys are watching live, you could have considered a similar position if you liked that idea. Give me my 560.80. That's what I want, Mr. Qs. That's all I want. Give me that 560.80. I'll probably look for my next trim. We'll see how volume is on this next push down here because we've kind of consolidated at the lows here on the Qs on the 1 minute. We're trying to consolidate here. I know it looks very rangy, but it's some level of consolidation. Clearly, this is a trend, right? Trending. This is the first sign of a bounce or some sort of potential base here. Now, some people may look at this as a potential bull reversal. I look at this and I call it a bear cool down. You have a test up on the trend. You pop up on the market. It allows bears to get out of their position and it works the other way as well, where you have a bull cool down. You have a bull rally and you come back down a bit to retest before going higher. This is what I would define as a bear cool down because you're cooling off the bear move a bit. You let things breathe before you drive lower. And that's seeing, or what we should see here more than likely in the near term. We might even go even a little bit more, like another 10 minutes here, sideways price, or mostly sideways price action here. But if we break this low again, then we're going to fall again. And I'll probably take another trim of my runners here. What do you think, guys? Would 200% sound good? A little bit over 200%. What's that? 340 something? 342, something like that? Pretty rad, pretty rad. I did a nice... Eddie says, I did a quick 15% on Google. Thanks. Right on, Eddie. I'm glad you made your own trade decision with my heavily talking about things. Oh, exclusive trading is in the chat. Hey, X, what's going on? Welcome to the show. X says, I like 200%. I like 200% too, my friend. I like a lot more than that, and I think I'm going to get a lot more, but we will see. Volatility continues to break. We just broke our 1830 level here on VIX. 2030's next. You got a decent markup here. Now, do I think that's going to happen? We'll see. As I said earlier, I think we're going to see volatility expand through the day, market going to sweep lower, and get some level of a turnaround by the end of the day. I don't think we're going to come back all the way to where we were, but some level of a turnaround on the overall market here. Oh, we just tapped 200%, just shy of it. We're a few pennies off. I didn't take a trim, but we're a few pennies off on that. We will see. SPY did break that 629.47 LOI. Qs are still driving lower. IWM somehow is, I don't even want to say the most bullish. Their charts are basically all the same, which is kind of what I warned about there a few minutes ago when we were looking at our sectors. We saw, oh, well, now we're seeing a little bit of bullishness coming through staples. But we saw everything trending lower, which was a sign that the whole market was looking to go more risk off. And that makes sense with where volatility was, right? However, we're seeing a little bit come into staples here, which could be the market actually going risk off versus just a more emotional fear selling, is what I'm trying to say, where the market may tilt defensive. So what you want to watch here is to see if energy or utilities also play ball here with a continued bearish XLK. That will give us an idea that the market's actually shifting defensively versus just panic selling, essentially, which is kind of what we're seeing here for the most part. A lot of panic setting in. Oh, can we get my trim out? Can we hit the 200%? We just basically need low day to break with a little bit of volume, and I'll probably crack over 200 with a few shekels over. That'd be nice. VIX continues to expand now at 1840, high a day on the VIX. VVIX also moving up, so keep that in the back of your head. UVXY moving up, so all volatility is expanding. NVIDIA kind of consolidating around the lows here. You're more than likely going to get another little pull here on NVIDIA. As I said with Meta, this was basically called to a T today. Love it. Microsoft is eating glue in the corner. Oh, Google, come on. Where's Eddie in the chat? Eddie! Eddie, you're my representative on this, man. 15%! Come on! This had to be at least 20 or 30. Eddie, I need you to go back and tell me you had a little bit more of that in the tank. There had to be. Okay, now I'm going to... Oh, damn. All right, now we're going to trim some out on those runners here. Actually, I'll wait a little. I'll trim some out. We'll trim a few out. Not 200%, but it's 190. Not too shabby. And you guys got that trade for free, right on the program, live and in living color. You knew exactly what to look at and everything. Everything. You had the whole game plan. And all you have to do is watch the program. So if you like the program, you want to see more stuff like that on the program, don't forget to check out exclusive trading. Links in my bio. But also, do me a favor. I ask you guys twice a stream. I'm asking you one more additional time. Do me a favor. Like the stream. If you found the content helpful, follow me on X, follow me on Twitter, Instagram, etc. And don't forget, if you like this content, you want more of it every single day, all you gotta do is go over to my YouTube channel and hit subscribe. Once we hit 500 subscribers, this will be a daily show. So if you enjoy the content and you want more of it, all you gotta do is click a button, tell a friend, right? Help me out here, and you'll get more. I'm giving you something, I'm giving you a little bit more something, and all you gotta do is click a button. Pretty good deal. So help me out, drop a little support in the chat, say hi to me. I always say hi back, and I appreciate you guys. All of you, all 100 some odd of you, all two sets of your eyes, two sets of your ears, listen to me on this beautiful Tuesday morning. Okay, now we've hit 200% and change. So if you waited a few more seconds past me, congratulations, you have 200%. Good volume here. All right, I'm going to trim out another tranche here. Oh, yeah, wait a second. We'll see. Decent volume here, but that candle's not too fancy. All right, I'm going to trim some out. 205% gain on that trade. So I have half my runner size left. My SPY trade! Guys! I said 270! Damn it, I missed it! I missed my exit! Damn you! Oh, bastard. Granted, it's only 5 cents more, but we'll we'll pop back to that. Oh, man. Now notice where I wanted to trim out some runners there. We saw a volume pop. Now depending on how that candle forms, that could be a sign, again, of a short-term reversal. Now in this particular scenario, again, I'm going to call this another bear cool-off, right? We want these to happen. You want moves like this to happen in this kind of trendy kind of move down, because that's indicative of more people being able to reload into the trend and drive it lower. Bears are going to take some profit, like you just watched me do it, because people get in at different points in times, right? So getting some level of a cool off here isn't a bad thing. I actually wanted more of a kind of a sideways price action up here back at around 10:30. We didn't really get it. We actually just drove lower, which, hey, I'm not mad about it. I'm already short, so it's cool. But you want to see periods of getting relief here, because that shows you the trend is still intact. More people can short. More people get scared, especially when you sweep the lows again. People who are long, that are underwater, are going to go, oh, damn, I give up, and close their positions, right? So that's what you want to see. It's good. You want to get little baby rallies here. Those are good things. Where you want to watch for is when the rally supersedes that previous low. In this case, right around like 563.28. That could be indicative of an actual reversal. But there's a lot of things you want to look at. Different technical levels, volume. Basically, volume and price action is going to tell you everything you need to know. So depending on how you tap that level, what volume looks like, and in this case, if you're trading the Qs, you want to watch your Mag 7, you want to watch your XLK to get a more clear picture of what's going on. Okay, I'm getting the hell out of those 631s now. I'm getting out of them. I'm rocking with a profit now. I'm going to trim some here from yesterday. Okay, 8% gain. Let's go. I'm going to put a stop loss on those if you're in the Discord. Rescued. Holy shit, we're at $4. Can we tap my 560.80? Later, Negum. Thanks for hanging out, brother. I know this is a longer stream than usual, but thanks for popping by, as per usual. Can we break that low? Let's see, let's see, let's see. You know what I'll do? I'll take some more off here. I won't be too greedy. I'll take a few off here. Okay. All right, now I'm in my last batch of runners. That trim was for 247% gain. I am on my last batch of runners. 247%. Let's go. Can we hit my price target? Again, the price target is 560.80. That is where I'm all out. Or maybe I'll leave like one on, but for the sake of talking about it live and everything, I'm all out there. That is where I'm done with the trade. It's so steep. All right, I'm going to trim more of those SPY out. Oh, baby. Let's go. Let's go. Oh, those SPY made 30%. I can't keep up. I can't type fast enough. My name's not exclusive trading. I don't have robot fingers. I can't keep up. I'm doing too much. I've got too many stupid screens up. All right, I want to go all out. Little bit more. Little tiny bit more. Little tiny bit more. Little bit more. Give me my level. I need 40 cents. Can I get it? I don't think so. I'm doubting my ability to get 40 cents here. X says, whoa. Come on. Give me 40, 60, 80. We walked you through this trade the entire live stream today. You knew exactly what to look for. Can we hit every single mark? Oh, God, I want to close. All right, I'm going to close. I have to. Come on. No, I got to do it for the culture. We got to do it for the meme. We got to do it for the meme. We got to hit the level. I'm on my last batch of runners here. Can we hit it? Can we hit it? 20 cents, 14 cents. So close. Damn it, X. Don't say 516.98 is a big trigger. Don't say that. That is 18. That's 18 cents above my area. Do not say that. Don't want to hear that right now. Don't tell me the truth. I can't handle the truth. I want 560.80. Come on. Fine, I'll get out. I'm out. 307% gain. 307%. Let's go. Ba-ba-ba-bow. Woo-wee. Oh, man. I believe the kids call that a banger. I'm pretty sure they call that a banger. Oh, damn it, X. Don't. I'm good. We didn't hit my level of the penny. It's okay. We'll hit your level. All right, man? It's cool. We'll hit your level. It's fine, man. It's all good. It's all good. I'll take the win. I'm going to close out my SPY here, too. I'm going to go flat on the day, more than likely. Take the wins when you get them, guys. Like I said earlier, volatility is very high right now, so you want to be more risk off than risk on. Want to be more risk off. I'm also going to close out my SPY spreads once I find them. Let's see how much I can make on those. Close out. Woo, they are spready. Maybe I'll give them a little bit more time. I'll take the win. Let's take the win. Going to close out my SPY spreads. I opened those for, I believe, 52 cents. Let's see what I can get on the close here. Going to try for a 77-cent fill. No dice. I'm just going to aggressively try to close out of these. 75 cents. It's a wide spread, so when you want to get out, sometimes you got to hit the in this case, the bid. I'm sorry, the ask. But I want to get as much money as I can. I know someone asked this question if you want to do a market order or anything like that. I wouldn't necessarily do one on a spread. I would just rather move like penny by penny. There you go. Execute at 74 cents. Bada bing, bada boom. All out SPY spread at 0.74. So that was, whatever that was, 52 cents. To 0.74, and I even wrote yesterday in our Discord 0.75 to 0.85 exit tomorrow would be ideal. So I was a little penny off the ideal exit, but nailed the plan. Had a trade plan, trade the plan. That is always the goal. Oh, fuck you! I don't curse much, but we hit my level. Ah, bastard. Hey, I'm not going to be greedy. Gains were made. Fun was had. Basically, top tick sniped the market today. I can't be too mad about that. But we did hit my 560.80. The trade plan was followed to a T. With the exception, I closed out like 20 cents early, but we followed the trade plan to the T. And that's always what you should do, because when you deviate from your plan, you're probably going to fail. Damn. All right, Neekum said, I thought you were saying goodbye earlier. This is too much fun. I know, man. I was saying goodbye. This is a long stream. Eddie dropped the GGs. How's that Google? Eddie, that Google got all the way down to 195. I still think it's going to tap this 0.786 retracement. Just saying. But Pretty good. Pretty good. My VIX literally went off the chart. Like I said, it's got room to 2030. VVIX up, UVXY up. Now, what I would look for, again, and I'll say this, I know things seem bearish, people are fearful, I made a lot of money on puts. Cool. I am of the mindset that this move reverses today. I don't know when just yet, and it would really depend on volatility. And you guys know, north of that 1775 area, you want to go risk off in general with the market. But as it stands, depending on how things look midday, this, in my opinion, will more than likely revert to the upside. Now, I don't necessarily mean we're going to close green on the day or pass the highs of the day or anything, but I would anticipate some level of a mean reversion here midday. Look at the volume climb here in SPY too. Interesting. Exclusive trading, dropping the party emojis in the chat. Eddie says, don't remind me, I sold all out at 15% paper hand that chunk. Listen, man, I know sometimes it gets really regretful when you might think you're paper handing things. Two mentalities I want you to have. One, if you sold because you made a good profit, you made money, right? And you were also de-risking. In your mind, risk was achieved, right? You made your money and you said, this might be risky, I want to get out of the way. That's fine. Second thought I want you to have, now depending on your portfolio size, this can change. But if you have the portfolio size where you can trim some out, leave some on with a stop loss, that affords you the ability to not limit your gains or use a trailing stop, right? It also depends on what you're looking at for a trade plan. Like my trade plan was, even though I didn't take the trade, but I spoke it out to you guys and you decide on whatever you want to do. That 197 area, if that broke to the downside and we couldn't break it, and especially if that VWAP area broke, especially that localized low here, you're going to have a pull more than likely down to here. So if you made your 15% even before that area breaks, you could have slapped a stop loss on it break even, again, if you have the ability to. And you're risking, yes, that 15% gain you made, but if you calculate your risk to reward, I don't know what this went to, theoretically, or whatever strike you pick, you probably had at least a 2-to-1 or 3-to-1 risk to reward with what you have left on the table. So you want to keep that in the back of your head where, yes, you want to take profit, and you want to protect your capital by using a stop loss, right? But in this scenario, if you're looking at potentially another 30, 40, 50%, you're risking 15% profit to make more profit. It's worth it in that scenario. If you're in the scenario where you made a 15% profit and you're risking that 15% profit to make 5%, no bueno. So it kind of depends on your mentality at the time. Keep that in the back of your head next time you look at a trade like Google and you might see a quick gain and you want to take it right away, which the exception to the rule is if you're in a 0 day. Because we were in a 0 day, or I was in a 0 day, and we had that quick drop immediately after I got in. You want to trim that every single time. You're going to get an IV pop, especially here on the buy the side or buy to open side of contracts. You want to get out as soon as you can or take advantage of that IV pop because that's free money essentially, and it could reverse obviously. So you want to take advantage of a drop like that when you get it very quickly, right? But outside of that, that's the exception to the rule of what I was talking about there. Neem says, me too, Eddie. Should have kept a runner. Could have made 3K. Oh, well. There you go. Better than losing. Yes, Nigo. My favorite saying that I say in our Discord all the time is missed money is better than lost money. Right? I'd rather miss out on a gain, like I did here theoretically with the Qs, where now it's reversing. So did I really miss out on a gain? I think I did a pretty good job. I could miss out on a gain, or I could lose money. I would rather always just miss out on the gain. Make a little less money, because I still made money, versus take a loss. That should always be your mentality. All right, guys. This is a fun one. I wish more days were like today. We had a fun day today. Didn't do our segment. I don't really want to. And I'm probably going to go grab some food now because I'm hungry and I'm hyped. That was a good little... Had a fun day. It was a fun stream. One of the better streams we've had in a while. Got a lot of energy. Mainly because we called everything to a T, and you all got to see it live here on the program. So once again, I'm saying it 3 times. If you haven't already, please go over to my YouTube channel, hit subscribe. Again, once we hit 500 subscribers, we are going to do this every single day. So please support the show, support the channel, follow me on next YouTube, all that fun jazz. And I am doing another show tomorrow for you guys at 9:15 a.m. Same bat time, same bat place. So make sure you tune into that as well. I will remind you before I take off here, as long as the VIX is north of 1775, please lower your risk. Lower your size on your trades because it is a higher volatility environment than it should be, at least on the day. So you may have a very bad time. Don't do that. Don't have a bad time. If you made money today, even walk away. Close the brokerage app. Don't go crazy. Trust me. Fewer, and I actually made a whole, I think it was like a 15-minute message this week in our Discord community. Less is more in this environment. And if you haven't yet, I made a video on my YouTube channel about how there is a potential, and I use the word generational, so not generational, but a once in an every few years buying opportunity lining up on the SPY right now. You don't want to blow your load now and lose all your money day trading because you're just impatient and the market's volatile and you want to make money. Of course, we all want to make money, but you want to be patient and you want to wait and call your shots. And I'm telling you, there is a massive opportunity on the SPY cooking. We're not there yet, but it's cooking and it's coming. And if you want to know what that level is, it's the most recently uploaded video on my YouTube channel. Go watch that if you haven't already, or watch yesterday's stream. Information's there. I promise you that will be something that is worth 9 minutes and 41 seconds of your time. Please, please, please watch that video. It's for your own good, because if that area does test on the SPY, and if you have money still because you didn't blow it all being a reckless trader when a high volatility environment, then you may have a once in a multi-year, I think 2 years is the lowest end, and on the high end 5 to 6 years, buying opportunity on the SPY. You're going to want to know what that is. Anyway, guys, that's going to do it for me today. I hope you had a fun time. Hope you had a good day on this program. And tomorrow we're doing it all again at 9:15. So I hope to see you then. So some say you may need an extra trade. Well, I like to look at things from a different angle, and that's always what you get right here on the Atomcash angle. Have a great rest of your day, guys. And remember, precision beats prediction every damn time. I'll see you tomorrow at 9:15.
The time has passed, and that's a wrap. You're on with the